All right, let's talk Opendoor. We're going to dive deep into a brand new technical report on the stock, that's ticker Open. We'll look at all the key signals, the trends, and try to figure out what could possibly be coming next. So let's jump right in.
So let's not bury the lead here. What's the big number? It's 62.50. That's the final technical score this report gives Opendoor. And look, in the world of technical analysis, a number like that, well, it tells a story. It's basically a thumbs up, but, a cautious one. It's saying, hey, the momentum looks good, but don't get ahead of yourselves. Now, we're going to spend the rest of our time unpacking exactly how they got to that number.
Okay, but before we get lost in all the charts and the nitty-gritty numbers, we got to get some context, right? What's actually been going on with the company? Let's take a quick look at Opendoor's recent report card.
Man, it has been a real mixed bag for them lately. On one hand, they absolutely crushed it on revenue in the third quarter, but they missed on their earnings per share. And the stock? Wow, it's been on a tear, surging all the way from its lows, fueled by this new strategic pivot towards AI and a big vote of confidence from JP Morgan. So you've got this fascinating push and pull of good and not so good news, and that's the world this technical analysis lives in.
All right, now that we've got the lay of the land, let's get into the really fun stuff, the core of the analysis. We're going to shift from what the company is doing to why the stock chart is doing what it's doing. It is time to decode the technical signals that led to that bullish score. So, just a quick refresher for anyone who might be new to this game. Technical indicators. What are they? They're basically just fancy math tools that look at a stock's history, its price, how much of it was traded, to try and guess where it's headed next. Honestly, the best way to think about them is like the dials and gauges on a pilot's dashboard. They help you navigate. All right, so the first set of gauges on our dashboard, these are all about the direction of travel. Are we climbing? Are we descending? Or are we just flying level? These are your trend indicators. And this is where it gets really cool. Check this out. It's not just one signal, it's how they talk to each other. First, you've got the ADX. It's at 25.34, which basically says, hey, this trend we're in, it's got legs. It's not just some random blip. Then the Arun indicator comes in and paints the rest of the picture. The Arun up is way up at 72, while the Arun down is snoozing at 24. The message couldn't be clearer. The uptrend isn't just strong, it's dominant. Okay, so we've established there's a strong upward trend. The big question is, can it last? Is this for real? To figure that out, analysts turn to moving averages. Think of it like smoothing out a really bumpy road so you can see where you're actually going. It just helps cut through all that daily static. And this is where the plot thickens a bit. If you look at the really short-term picture, like the 5-day average, it's acting as a little bit of a speed bump, some mild resistance, and that's totally normal after a big run-up. But here's the kicker. The long-term averages are way down below the current price. It's like having a giant safety net underneath you, providing this solid foundation of support. And that is a huge confirmation that the bigger trend is healthy. All right, next up on our dashboard. We know the direction, but what about the speed? Are we cruising or are we hitting the accelerator? That, my friends, is where momentum indicators come into play. Ah, the MACD. Traders absolutely love this thing, and for good reason. Right now, for Opendoor, the MACD is practically screaming bullish from the rooftops. It's not just that the main line is above the signal line. What's really telling is that the space between them is getting wider. That expansion means the upward momentum is actually picking up steam. It's accelerating. That is a massive green flag for the bulls. Okay, so let's recap. The indicators say we're heading up, and we're heading up fast. But what does that actually mean for your wallet? In real dollars and cents. Let's switch gears and talk about the specific price levels that everyone's watching and, of course, the risk involved. I like to think of every stock chart as a battlefield, right? It has a floor and a ceiling. For Opendoor, this report pegs the floor, the support level, at $7.66. That's the line where buyers tend to show up in force. The ceiling, or resistance, is at $8.77. That's the wall they need to break through to keep climbing. Those two numbers, they are absolutely everything right now. And then there's the risk-to-reward ratio. The report calculates it at 0.678. So what does that mean? Basically, for every dollar you might risk, the potential reward is about 68 cents based on this setup. Look, it's not a home run, it's not a lottery ticket, but it's a solid setup that tilts the odds just a little bit in favor of the bulls. But, and this is a really big but, it is not all sunshine and roses. This is the piece of the puzzle that puts the brakes on everything. The company itself came out and said they expect revenue to be way down in the fourth quarter.
That's a huge headwind, and it's exactly why that score we saw earlier is cautiously bullish and not just, wildly optimistic. So you've got this conflict, right? The charts are screaming, go, but the company's forecast is saying, whoa, slow down. How do you square that circle? Well, the report lays out 3 possible futures, 3 different paths this could all take from here. Path number 1, the bullish road. Here, the excitement over their AI strategy wins out and the stock just blasts right through that 877 ceiling. Path 2, the neutral zone. The stock basically just chills out, trading sideways around 831, taking a well-deserved breather while everyone figures out what to do next. And then there's path 3, the bearish outcome. In this story, that weak Q4 guidance spooks investors and the stock breaks down below that critical 766 floor. So, after all that, the indicators, the price levels, the 3 possible futures, where does that leave us? What's the final verdict here? I think this one quote from the report just nails it. The technical setup, it's strong. There's no denying it. You've got momentum, you've got a supported trend, all the key signs are pointing up. So, if we boil it all down, here's the deal. The report is bullish, yes, but with a big asterisk. That 62.50 score is legit. It's backed by real momentum. But you can't ignore that weak guidance, and you can't ignore the fact that the stock has already had a huge run. So this is not a close your eyes and buy situation. The advice here is to be smart. Watch those key levels like a hawk, and maybe, just maybe, consider buying if the price dips back to where that support floor we talked about. And that really leaves us with the million-dollar question, doesn't it? We've seen all the data, the glowing technical signals on one side, and the pretty serious fundamental warnings on the other. So which is it? Is this a stock getting ready for its next big move up, making any dip a gift? Or is this whole thing a classic bull trap, with the fancy charts hiding some real problems underneath? That's the puzzle this report leaves us to consider.